and Assalamu alaikum. A very warm welcome to the Audit and Assurance online classes. I am your tutor Kashif Kamran. Today in sequence of lecture, we are having our 17th lecture. And for the syllabus area C, which is internal controls, this will be the very first lecture. Now, in terms of the AA syllabus, so far, we have completed the syllabus area A, which is audit frameworks and regulations in the prior 16 lectures. We have also completed the syllabus area B, which is planning and risk assessment, and a very important area from an examination point of view in the previous 16 lectures. Today in the 17th lecture, which is the very first one for the syllabus area C, we will be starting with the topic internal controls. So the focus from today onwards and for next many lectures will be on internal controls, and we will be focusing on internal controls as a syllabus area starting from the 17th lecture onwards. Now, after this syllabus area C gets over, we will be covering the syllabus area D, which is audit evidence, and then E, which is review and reporting. Let's start with the very first lecture on the syllabus area C, which is internal controls, the 17th lecture in sequence. Now, syllabus area C, which is about internal controls, is a very important syllabus area. Just like the previous syllabus area, which was risk assessment. The regularity of a question coming on internal controls is almost in every single exam sitting in the section B of the paper, which is a 70% of your paper. Ideally, in every single exam setting, you get a question on internal controls. There are numerous types of questions which comes on internal control, and I will be preparing you for all sort of questions. So this is an extremely important syllabus area. There is a blend of knowledge and a blend of application. So certain areas which I will be covering with you in this syllabus area C are knowledge areas on which you get direct questions. And on certain areas, you do get an application question where an examiner gives you a case study and you need to connect your answer with the case study. So let's start the journey on syllabus area C with the very first lecture on internal controls. Let's see what's the breakdown of the syllabus area C. Now, when you look at the breakdown of syllabus area C as per the syllabus guide published by the AA examining team, there are 6 syllabus areas inside syllabus area C. The first one, internal control systems. The second one is the use and evaluation of the system of controls by the auditor. Test of controls, a very important area from an examination point of view. Communication on internal controls. Internal audit and governance, and the difference between internal and external audit, that's more like a knowledge area. The scope of internal audit function, again, that's like a knowledge area, outsourcing of the internal audit function, and internal audit assignment. Now, if you look at these 6 areas, particularly these 2 areas, test of controls and communication on internal control, these are areas where you need to look into a case study. So this is more application areas. The rest of the areas, I'm writing the word K, knowledge. These are all knowledge areas. Knowledge, number 2, knowledge, internal audit, knowledge, and the scope of internal audit, knowledge. There is plenty of knowledge. 4 syllabus areas is going with the knowledge element. There are 2 syllabus areas which are going with the element of application. So from an examination point of view, when we see the reoccurrence of this topic coming in every single exam sitting, so the 2 critical areas are these. These are 2 critical areas from an examination point of view where I have to spend a lot of time when I'm delivering lectures and doing the past papers. The rest of the areas will not take much time because these are knowledge areas, but the areas which will take time because we have to do the practice as well is the 3rd area, test of control, and the 4th area, communication on internal controls. Let's first start today with the very first lecture from the syllabus area C, focusing on understanding of what internal control systems are. So the first topic today would be internal control systems. Now, just before we start that, let's look at the capability which your examining team expects from you from syllabus area C. On the left-hand side, you can see the capability after going with the syllabus area C. And after the syllabus area C gets over, you should have this capability. Describe and evaluate internal controls, techniques and audit test, including ID systems to identify and communicate control risk and their potential consequences, making appropriate recommendations. Describe the scope, role, and function of internal audit. So by the end of the syllabus area C, you should be able to describe the scope, role, and function of the internal audit department, which is part of the syllabus. You should also be knowing consequences of a weak internal controls. What are consequences of a weak internal controls to an organization? Making recommendations to the organizations to improve the internal control system, because there is a very typical question which comes in AA, is to identify the deficiencies in the internal control system. So you will be reading a case study, and from a case study, you will be identifying the deficiencies in the system. And then the examiner will ask you, provide a recommendation to overcome a deficiency. So you need to give a recommendation to overcome a deficiency. So knowing the deficiency, identifying the deficiency from a given case study in the exam paper, and then ensuring that you know the right recommendation for overcoming the deficiency. So you should know the systems, you should know the deficiencies in the system, but again, that is not something you can rote learn, because you go to the exam and you look at a case study, and from the case study, you need to think about the deficiencies. You cannot just go with the rote learning of deficiencies into the exam hall. And again, the recommendations is something to be thought of in the context of the case study. Now, on the right-hand side, how it may be tested. This capability and the next, which is the syllabus area D, right, will relate to the testing of controls. So examiner will ask you a lot of questions on testing of controls, which I have just marked as a critical syllabus area, and the collection of audit evidence using test of controls and substantive procedures. Substantive procedure is the next syllabus area, which is D. So examiner is saying this capability and the next one, which is about the syllabus area D, will ask you to do the test of controls and the substantive procedures, which is in the syllabus area D. It is important that candidates understand the difference between the two procedures, the test of control procedures and substantive. In syllabus area C, you will be understanding test of controls. In the syllabus area D, you will be understanding substantive procedure. So obviously, you will have a clear difference between the two types of procedure the auditor performed to gather evidence. Identify key controls. You should know from a given case study what are key controls. So if the examiner asks you identify the key controls, so you will read the case study and you will identify the key controls put in place by the management. Now, again, this is not a rote learning. You are reading a case, and in the case, you will look at the key controls which have been put in place by the management, and describing suitable test of controls, as well as reporting of recommendations regarding deficiencies in internal controls or other issues found in an audit, so on and so forth. So the bottom line is, one question will ask you identify the key controls. Another question might ask you recommend the test of controls. Another question might ask you identify and explain the deficiencies and provide a recommendation. Now, this is what I was telling you right here. This test of controls and communication on internal controls. Test of control is a very regular question. Examiner asking you what are key controls and how would you test them? Examiner asking you how would you communicate deficiencies in the internal control system to the management? Now you need to identify the deficiencies and you need to provide a recommendation on overcoming the deficiency to the management. So these are two critical areas. But again, you will understand the right exam rigor once we go inside this area, test of control, and once we go inside this area, communication on internal control. So you will understand the right sort of capabilities you should be having and how it will be tested. So let's first start with the topic 1 today. Let's build the mindset of this topic. And once we venture into the topic 3, topic 4, you will be able to understand in a better manner the capability and how it will be tested. Okay, let's start first with the topic 1, internal control systems. Let's understand what they are basically before we see how the auditor tests them and how the auditor identified deficiencies in them. No article on internal control systems, so you will just rely on the knowledge coming from the lecture. Just one exam question for 4 marks. which is September, December 19, scenario 2A. So a 4 marks question on this particular area, internal control systems. It's a knowledge area, right? It's a knowledge area. It's not an area which requires an application to a case study. So this is the first one. Let's start with the understanding of the internal control systems. Let me take on my Word file for the start of this topic, topic 1. I hope you can see the Word file on your screen now, which is for the lecture 17 in sequence and the lecture 1 for syllabus area C, which is where we are discussing the topic 1 today. And the topic 1 is internal control system. Now, try to understand an objective before I put my lecture. Objective. Now, the objective is that you should understand that in any organization, the importance of internal control systems. Now, we know if you have internal control systems in place, or if you have strong internal control systems in place, the risk of material misstatements in financial statement goes down. We have already done this topic in syllabus area B, risk assessment, control risk. If controls are strong, the control risk goes down. If the controls are strong, the risk of material misstatement goes down, because we know the inherent risk and the control risk together is known as the risk of material misstatement from the syllabus area B. So when you are doing the topic 1, when you are understanding the internal control systems in an organization, you should also try to understand the importance of them, the benefit of them to the external auditor. So what is the objective, or what will be the key learning? Objective or key learning from this first topic? The first objective or the key learning which you should get from this topic is what are internal control systems. Sorry, just 1 minute. The first key learning you will get from this topic is what is an internal control system? What is an internal control system, and what are the components of a good internal control system? What are components of a good internal control system? That's the first learning. Importance of effective controls, importance of effective controls to the organization, and importance of effective controls to the external auditor. So what is the importance of effective control to the organization and to the external auditor? And you should also understand the correlation of effective controls with the external auditor control risk. What is the correlation between effective controls and external auditor control risk, which he assessed at the stage of planning in the syllabus area B? So the key learnings is to know what is the internal control system and what are components of a good internal control system. What is the importance of having good controls to the management, and what is the importance of a good control to the auditor, and correlation of effective controls with external auditors, external auditor control risk. And finally, what are objectives of internal control system? Example, sales system. What are objective of an internal control system, like a purchase system? There are so many systems in the company, right? Your sales system, your purchase system, your payroll systems, your expenditure systems, because management will have systems for every critical area, like payrolls, like sales, like purchases, like expenditure. And management will have systems in place for each and every critical area. So what are objectives of an internal control system, like sales, purchase, payroll, and expenditure, and what sort of learnings you should have as a student in terms of these objectives? Will the examiner ask you these objectives? Should you rote learn these objectives? Let's find the answer shortly. So these are some of the key learnings you should be having from this topic 1, internal control system. Let's start the journey and let's start to understand each one of them in order. Okay, let's first go down with what are internal control systems and what What are the components of a sound system? So let's take this as the first one, the first question, and let's get down with the answer. Okay, this is the first one. So let's start this as the first exercise. What is an internal control system and what are components of a sound system of internal controls? Let's go back to the presentation. Let's start with internal control systems. Now, when you look at the internal control systems, in order to be sound, consist of some components. Now, we know every organization have in place a system. Now, some have weak systems, some have strong systems. You look at listed companies, primarily they have stronger ones because they have corporate governance, they have audit committees. You look at non-listed companies, they might have weak systems. Family businesses might have weak systems. Small companies might have weak systems. But when you look at the larger companies, the complex companies, the listed companies, they have better systems in place because of the corporate governance, because of the non-executive directors, or because of the audit committee. So I think the robustness of internal control is better in a listed company versus a family business, versus a small company, or versus a sole proprietor. So I think that sort of a mindset should exist in a student as well, that primarily the listed companies have better systems in place. And I think corporate governance is a major contribution to that. Now, when we speak of a system in place, when we speak of controls in place, when we speak of internal controls in place, what exactly are components of controls? Now, when you look at components of control, the ISA, the International Standards on Auditing, ISA 315, defines us the components of internal control systems. Number one, control environment. Number two, entity risk assessment process. Number three, information system. Number four, control activities. And number five, monitoring of control. Right? So these are five components of an internal control system. So you need to understand the five components. Now, the first one is what you need to focus on is the environment. The second is the risk assessment process. Not the auditor risk assessment process. We are talking about controls in an organization, right? So we are talking about from a management perspective. Now, what sort of a risk assessment process should be in place by the management to identify the risk? Because if there is a risk, then the management will overcome the risk by having better controls in place. So the first component of a sound system of internal control is the environment. The second is the risk assessment process. The third is an information system. The fourth is an activity, control activity. And fifth is monitoring of control. Let's understand each one of them in order. And let's understand what is the correlation of these five with a sound system of internal controls. Let me take on my Word file and let me start explaining each one of them. Now, when you look at what is an internal control system and what are components of a good system of internal control, let's go down with this order. I'm using the short form ICS, internal control systems, because it's a long term to be used again and again in the lecture. So internal control system is a system which consists of policies, and procedures put in place by the management in an organization for an orderly conduct of business. You want an orderly conduct of business, right? Because if there are no policies and procedures, you will have a very disorganized looking company. So if you want to have a very organized company where everything is done systematically, you need to make the policies and procedures. We know no company can be run without policies and procedure. If there are no policies and procedure, there will be a complete chaos in a company. Everything will be haphazard in a company. So ICS is a system, right, which consists of policies and procedures put in place by the management in an organization for an orderly conduct of the business. So that's like a definition of what an ICS is. Now, a good ICS consist of 5 elements. So the good ICS consists of the 5 elements. Number 1, a good ICS consists of the 5 elements. Number 1 element, control environment. Number 2, entity risk assessment process. Number 3, information system. Number 4, control activities. And number 5, monitoring of controls. Let's understand each one of them in order. Now, when you look at the first one, which is control environment, the focal word here is environment. Environment means culture. Environment means culture. Environment means the tone of the top management, or it's the attitude of the top management towards an internal control system. How serious is the top management about putting in place a system? Do the top management likes to invest resources, likes to invest time, likes to invest money in developing a good system? Is the management really serious about having a good system in place? But if the management is like a fraudulent management or a fraudulent mindset management, probably they don't like to have a systems in place. So you first need to know the commitment of the management. If there is a commitment from the management, if there is an attitude from the management, definitely they will have a very strong system in place. So for having a system, for having the policies and procedures, you need to have a commitment from the top management. You should have a tone from the top management. You should have the right behavior from the top management. So environment means the culture, and we know the culture comes from the top management. Are they really serious about controls? Do they really want to have policies and procedures in the organization? Do they really want to ensure that the systems are put in place for an orderly conduct of the business? So environment means culture, tone of the top management, attitude of the top management towards an internal control system, or is the commitment of the top management to put in place a sound system. Now realize, without environment, everything is useless. If you don't have the right environment, the point number 2, 3, 4, 5 becomes useless. But if you have the point number 1, if you have the right tone, if you have the right attitude, you have the right commitment, automatically the point number 2, 3, 4, 5 starts looking better. So the very first thing which ensures that you have a sound system of internal control in the organization is what? Is environment. And there are so many words which relates with environment, right? The culture for having controls, the tone of the top management, the attitude of the top management, and the commitment of the top management. So all of them have to be present for having a good culture. Environment means culture, right? So if you have the right culture, will you have the right controls? Yes. Will you have the right internal control system? Yes. Now the second, entity risk assessment process. Now if sorry, if you want to have controls in place, first of all, you need to identify where is the risk, where is the problem, where is the issue, because you want to put controls at the right places. You want to ensure that controls are put at the right places in the organization. You want to assess the risk. You want to assess where is the risk inside the organization. Again, this is not the audit risk. We're talking from the management perspective. The management should carry out a risk assessment process. Where is the risk? Is there a risk that someone can, is there a risk of a theft in a company? Is there a risk that someone can steal something from the inventory warehouse? Is there a risk that someone can enter a wrong password and intrude into someone laptop, someone important information? Because there are so many risks within organizations, right? Human errors, entering a wrong password, breaking a password, a risk of a theft. a risk of a window dressing in the financial statements. There are so many risks which exist in the organization because of the human involvement. Now, you need to identify the risk. You need to identify where is the opportunity. Where is the opportunity for a culprit to do a fraud? Where is the opportunity for someone to do an error? So entity risk assessment process is a scanning process undertaken by the management to identify the loopholes or to identify the weaknesses within the organization where things can go wrong, because if you identify the risk, then only you will put in place a strong system. Is a scanning process undertaken by the management to identify the loopholes, the weaknesses within the organization where things can go wrong, or where there might be an opportunity, for someone to commit fraud. You need to find where are the opportunities for someone committing fraud. So an opportunity to commit fraud is like a risk, right? So is a scanning process, a thorough scanning process. And again, if you have the right culture, you have the right attitude, this will take place. If you don't, then it will not take place. So it's a scanning process, right? To identify the loopholes, to identify the weaknesses, to identify the opportunities where things can go wrong in the organization. So it's a risk assessment process. For example, the risk of theft of inventory from the warehouse, or risk that cash could be stolen, or the risk that cash could be stolen, or a risk that there is a collusion to window dress the financial statements, right? So there are opportunities in company, right? There is an opportunity that someone collides and do the window dressing. There is a collusion that someone do the collusion to do a fraud in a company. Because when you have so much human power in a company, with human power, you need to be very alert, because the same human power can be the culprit for fraud, can be the culprit for errors, can be culprit for stealing cash and inventory. So you need to find the pockets, you need to find the opportunities where such risk exists in an organization. So you should have an entity risk assessment process. Next, information systems. You should have a proper systems in place through which you can communicate the problems and issues. For example, someone needs to whistleblow the problem, right? For example, there is a fraud going on in the company. How will a person having a knowledge of fraud will report it to someone so that the action can be taken? For example, you are a boss, you are a manager, and you know your employee is doing a fraud. What will you do? To whom you will communicate? You need to whistleblow. You need to take some actions. Information system is like a channel of communication through which the problems, the issues, the weaknesses, potential frauds, potential errors are communicated to the management on a timely basis. So the management is alert. Information system helps with the entity risk assessment process. Information system helps the management to be alert of the problems, of the issues going on in the organization. So it's like a feedback process, right? Where the management give feedbacks to the strategic management. If there is any health and safety issues at the factory, the supervisor should tell this to the top management. The supervisor should tell that there are lots of health and safety issues going on in the factory, and we should come out with some very good controls through which we can mitigate the health and safety issues in the organization. So information system is a channel of communication, whereby issues, problems, weaknesses, instances of fraud, or any unusual activity within the organization, is reported to the right level, for prompt actions, Information system help management to be alert of the ground realities, and also information system help management to be alert of the ground realities, and also help them with the risk assessment process. And also the information system helps you with the risk assessment process, because for assessing risk, you need the information, right? And the information will come from different people in the organization. Anyone can report a problem, right? So, and also help management with the risk assessment process. So you need to understand the contribution of this information system. It's like a channel of communication. It could be a manual channel of communication. It could be an electronic channel of communication. So, but it is a channel of communication, right? It could be through email. It could be through verbal communications. It could be through a report writing, anything. So information system has to be robust. The channels of communication have to be robust. I should know to whom should I report. If there is a problem happening in my department, to whom should I be telling it? So the information system should be very well defined. The channel of communication should be very well defined for communicating the problems and issues and weaknesses to the right person at the right time. So that's the importance of an information system in a sound system of internal control. If the information systems are weak, you will have no knowledge of the problems. You will have no knowledge of the issues. That means your risk assessment is weaker. Try to understand the correlation between risk assessment process and information system. They are correlated. So if one of the function is weaker, it can directly or indirectly affect the second function. Just like if the environment is weak, then there will be no risk assessment. If the environment is weak, there will be no information systems. So try to understand the correlations, right, between 1, 2, 3, 4, 5, not just doing them in isolations. Okay, control activities. Control activities is the mitigation, right? The policies and procedures. The policies and procedures put in place by the management to mitigate the identified risk, Point number 2. Point number 3. If you have identified a risk, a weakness, a issue, a problem, how would you overcome it? Through policies and procedures. Control activities is the policies and procedures put in place by the management for risk. For example, segregation of duties is one very good control activity. Segregation of duties. You don't want one person to perform many tasks, because if one person is performing many tasks, he might be in a better position to do a fraud, because he knows, okay, I'm responsible for the whole process and I can do anything, I can manipulate anything in the whole process. But if you break the task between different people, then the opportunity for fraud goes down. Because if I am inputting something, the second person is processing it and the third person is taking out the output. But if I'm doing the input, I'm doing the processing, I'm doing the output, I can do a wrong input, I can do a wrong processing, I can get the wrong output, but no one is checking it out. But if I do a wrong input, it might get caught up at the time of processing, or it might get caught up at the time of output. So there are 3 different people responsible for input, processing, and output. So for example, a segregation of duty or authorizations. We know authorization is a very good control activity. Someone should authorize. So if I am doing something, I need to take a permission from someone, because if there are no permissions, no authorizations, then I can do whatever I like to do. So authorizations is a very good control activities, a very good policies and procedures put in place by the organizations. Strong passwords. Passwords is such a good control activity, right? For ensuring there is a restricted access to critical information. Passwords, like your etc. So you should have some policies and procedures in place. You should have some check and balance in place for ensuring that the identified risks are mitigated. So if there is a risk of theft, you can have a physical security for a risk of theft. You can have logical security like a password for any wrong intrusion into information systems. You can have authorizations. You can have segregations of duties. So these are like controls in place to ensure that nothing goes wrong. So when you identify a risk, you put controls in place for avoiding any future event, for avoiding any future risk, or for avoiding any future weaknesses or loopholes or opportunities, etc. Monitoring of control. Now, obviously, whether the policies are being followed, whether the policies are being followed, you need to have a check and balance. So monitoring is a check and balance to ensure control activities are operating as effectively as possible. You need to have a check and balance over the control activities, that they're operating as effectively as possible. For example, the internal audit department is responsible for monitoring, So you have 5 elements of a sound system, right? First of all, a sound system should have an environment, the right tone, the right culture, the right commitment for a system to be developed. Then again, you should have a proper risk assessment process whereby you scan your whole organization. You scan the organization for where are the potential opportunities to do fraud, where are the potential opportunities where something can happen wrong, where are the weaknesses, where are the loopholes. So you try to have a deep scan of your whole organization to find areas of potential risk or areas of potential opportunities where a fraud can take place. Then you should have a proper information system whereby communication can take place, whereby information can be passed on about any potential risk happening in the organization. Then you should have proper activities in place so that future frauds or future errors or future risk can be mitigated. And then you have a proper monitoring. Just 1 minute, right? So these are 5 elements, right, of a sound system of internal control. What your examiner expects from you from these 5 elements, just knowledge. He might ask you list the 5 components of an internal control system. He might ask you explain the control environment, define the control environment. So it's something where a definition can come in, or it's something where the examiner can ask you list them down. So that's the maximum, right? So just try to go over the 5 components. Just try to understand the connection of these 5 components with the sound system of internal controls, and just try to ensure that you have them on your fingertips. Now, going back and looking at this, components of internal control. So when the management sits down and they want to put in place a sound system of internal control, they should have these 5 components in place. Number 1, an environment. Number 2, a risk assessment process. Number 3, a proper information system, which is a channel of communication, control activities, and monitoring of controls. Now, moving onwards, the types of control activities. We just took some examples. Segregation of duties, such an important activity in an organization to break the process between different people, because if a process as a whole is given to one person, he is in a better position to do a fraud, or because if you give someone, if someone has overpowers, he will misuse those powers. So you need to break things down. Like mostly if someone is inputting something, another person is recording something. So you cannot just give the whole function to one person, right? So if there is a process which have 5 activities, every activity should be given to a different person for a better check and balance. So if one person do the error, the second can get hold of it. So if a second person do the error, the third can get hold of it, right? So you need to ensure there is a proper segregation of duties. No one person is doing the process as a whole, right? So the process as a whole should not be with one person. Physical controls like securities, authorizations, monitoring of controls is a very good control activity itself, though monitoring of control is a separate element. But you need to realize that even monitoring of controls, a check and balance, is a control activity itself. So one is a preventive activity, one is a detective activity. So you have activities in place, right, from stopping something from occurring. But if something do occur, so you have 2 types of activities, right? You have 2 types of activities. One is a preventive activity, stopping something from happening, preventive. And you have a detective activity. If something has happened wrong, you need to detect it. So I think this monitoring of control is a detective activity, right? Segregation of duties, physical controls, authorizations are preventive measures from stopping something from happening. So one is preventive, one is detective. Computer controls like passwords, reconciliation, such important part of control activities, bank reconciliations, supplier reconciliations, customer reconciliations. The balance in the customer book and the balance in my book should tally. If it's not telling, there might be some issues, some problems, some reconciling items. The reconciling items might be a fraud. Reconciling the balance as per bank, the balance as per cash book. If the balance as per cash book and the balance as per bank is not reconciling, you need to investigate the reconciling items. Some of the reconciling items might be logical, some of them might be illogical, and you might get hold of a fraudulent activity. Trial balances and control accounts, such an important check and balance on the financial systems. If your trial balance is not balancing, means there is an error or there is a fraud, there is a window dressing, that you have done a debit but you've not done a credit. So trial balances and control accounts is a good check and balance on your true and fair view of the financial statements. And variance analysis, budgets versus actual, is such a good control. If the actuals are more than budgets, you need to investigate them why. If, for example, your expenditure budget was 100, but your actual expenditure is 200, someone might be misusing the expenditure. Someone might be misusing the expenditure for his or her personal expenditures. So you need to ensure the budgets and actuals are reconciled, variances are identified. If the variances are very significantly higher, you should ask reasons for that. So these variances analysis, the reconciliations, the trial balances, these are all sort of controls you put in place on your financial systems, ensuring that the financial statements are true and fair. So these are examples of control activities, right, which can be put in place. Some limitations, because with everything we have limitations, right? Nothing is exempted from limitations. Controls, the management has put a sound system of controls in the organization, but that sound system is not a guarantee that fraud will not take place. You need to understand that the system of control is being run by humans. Human errors are possible, right? Human lapses are possible. The system is being run by the management, and the management is in a position to override controls. A director can override controls. Who will ask director? Who will question director? Because the director is the one who has implemented the system. So the director is in an authoritative position to manipulate or override controls where he wants to. That is why if a window dressing is taking place at a strategic management level, it's difficult. So strategic frauds are more difficult than the management frauds, right? Because the strategic level management is in a position to override controls. Non-routine transactions. We normally put controls on routine transactions. But if there is a non-routine transaction, we have no controls in place. Something happens for the first time in the organization, we have no controls in place. But if something is happening in the organization on a daily basis, like sales, like purchase, like payroll, we have controls for them. But if something happens for the first time in the organization, we have no check and balance for that. So non-routine transaction stands at a much greater risk over the routine transactions, because routine transactions are covered under control activities and cost versus benefit. You cannot put controls at every place in the organization. You need to see the cost of a control versus the benefit of a control. So there might be lots of areas in the organization where controls are not put in place because the cost is more rather the benefits, and you don't have controls in place. So is the entire organization covered by controls? No. You are focusing on routines rather non-routines. There is an element of human error. So can an internal control system give you a guarantee that there will be no fraud in place? No. Try to understand the internal control system is only giving us a reasonable assurance. It is not a guarantee. Even with a good internal control system, you can have a fraud. Even with a good internal control system, you can have a error. So you need to understand the mindset that internal control systems cannot be 100% perfect, right? There can still be opportunities, but having a system is good rather than putting a lame excuse that because there are so many limitations of systems, let's not have systems. You should have systems with limitations. At least something is better than nothing. Now, the last thing, where I just need to put some exemplary exercise here. What you need to do is, after you listen to this lecture, which is the lecture 17 in sequence and the first one for syllabus area C, you open your textbook for internal controls, and you will find that in the textbook, lots of systems are given. Sales system, number 2, purchase system, number 3, payroll system, number 4, expenditure system, and number 5, the cash system. Five systems, right? You should go over the 5 systems. You should go over the 5 systems, read the 5 systems. They will help you. How they will help you? The first example of that is in the lecture today. The later example of how they will help you is in the upcoming lectures from the syllabus area C. But please ensure you read the 5 systems. What and how you should be reading the 5 systems. Let me guide you about that. Now, for example, you look at a sales system in front, which is a summary of a sales system. Now, when the management is making a sales system for the first time, they should have an objective first. See, without objective, we cannot have anything. If you are doing something, first of all, you should have a purpose. First of all, you should have an objective. Now, for example, the management has an objective for putting in place a sales system, a sound sales system. The first objective is sales are made to valid customers. We're not making sales to invalid customers. We are only making sales to the customer who are valid, not invalid customers. Now, that is my objective. I want to ensure that my sales system is only making sales to valid customer or to the approved customer, not to the non-approved customer. My second objective is right quantity is dispatched to customers. I'm dispatching the right quantity to customers. If a customer has ordered 100, he's not getting 1,000. If the customer has ordered 100, he's not getting 10. He's getting the right quantity. My third objective of a sales system is invoices are accurately processed. If I need to raise an invoice of $1,000 to a customer, I'm not raising an invoice of a $10,000 to a customer. The customer might get irritative and you might lose your customer. So putting the right invoice to the right customer. Sales are accurately recorded. I don't want sales to be overstated. If you have made a sale of $1,000, then you should recognize a sales of $1,000. You should credit the sales by $1,000. Or you should debit the cash, or you should debit the account receivable by $1,000. No overstatements, right? And cash is collected within a reasonable period. If there is an account receivable, the cash is collected within a reasonable period. These are objectives. These are purpose. So when I am making a system as a management, Sales system, purchase system, payroll system, cash system, expenditure system. I should first sit down with a pen and paper and think about what is the purpose, why I need to have a system in place. Now, I know I need to have a system in place because I want to ensure that the sales are made to the approved customers only. Right quantity is dispatched to the customer. Right amount of invoice is raised to the customer. Sales are accurately recorded and cash is collected within a reasonable period. Suppose your credit terms are 30 days. So you should ensure that the cash is collected within 30 days. Otherwise, you're increasing the risk of bad debts. Now, when you have objectives, you need to think about what are risks with these objectives. Now, try to connect the risk with your objectives. Sales are made to valid customer. What's the risk? Orders taken from customers who are unlikely to pay. I might take orders from customer who are not credit worthy. Valid customer means a credit worthy customer. But what if I take a customer who is not credit worthy? I make a sale of $1,000 to a customer and he doesn't pay me back. So orders taken from customers who are unlikely to pay. So there is a risk, right? There is a risk that I might take orders from customer who are unlikely to pay. I should have a right procedure in place. Procedure is an activity, right? Control activity. Look at the activity. Customers are checked for creditworthiness prior to accepting them. You know, in almost every companies, we have a creditworthiness check. You check the customer for creditworthiness prior to accepting a customer. So if a customer comes to you and asks you, I want to buy from you. We are talking about large customers, right? Not customers like me and you. If the customer comes to you and asks you, I want to buy from you on credit, you will say, okay, let me first check your creditworthiness. Are you worthy to pay on time? And if you're a credit worthy customer, I will give you the goods on credit. So checking customers prior for credit worthiness is a good activity. But if you're not checking customer prior, you are having a risk that you might take on a customer who fail to pay later. So when you define your objectives, with objectives, you need to think about what can go wrong. What can go wrong? So sales are made to valid customer. Risk, what can go wrong? What can go wrong? And then a procedure, how to overcome the risk. What procedure should I have in place to overcome what can go wrong? So if I can accept a bad customer, how can I overcome the risk of accepting a bad customer? I should have put in place a proper creditworthiness check and balance. So this is how the management defines a system, right? They think about an objective, then they think about the risk, entity risk assessment. What is the risk with sales are made to valid customer? And how would I mitigate the risk? The mitigation is coming from a procedure. Second, right quantity is dispatched to customer. What's the risk? Incorrect goods sent to customer. How to overcome this risk? How to mitigate this risk? Pick goods using the customer details or agreed the good dispatch note with customer order. When you are dispatching goods to a customer, keep the order in front. Okay, Mr. A ordered 100 units. Okay, I'm dispatching Mr. A. Okay, what is the good dispatch note of Mr. A? The good dispatch note of Mr. A says 100 units. Okay, order 100 units, dispatch note 100 units, agree. So there is a customer order and there is a dispatch note. So Mr. A order, Mr. A dispatch note, 100, 100, tally, good. But if the order says 100, dispatch note says 10, issue, procedure. Third, invoices are accurately processed. That's the objective. I want to ensure that. But invoices, incorrect invoice raised to customer, risk. What procedure? The invoice should be agreed to the relevant GDN and authorized. How many goods have I dispatched to customer? 100? Yes. And the invoice says 10 units. Now the units on invoice should agree with the units on the dispatch note. So if the dispatch note says 100, the invoice should also say 100. The invoice should agree to the relevant GDN and authorized. That's the procedure to mitigate the risk of incorrect invoice raised to customer. Check and balance. Sales are recorded accurately. I want to ensure that. But what's the risk? Sales are over or under recorded. Dispatch regular customer balance statements, regular reconciliations with customer. Try to reconcile your balances with customers every possible time. Because if your balance and the customer balance are reconciled, that means there is no understatements and overstatement of sale. But if the customer is saying, I want to pay less, but the company is saying, I want to receive more, there might be a risk of overstatement. And the company is saying, I want to receive 1,000 from you. The customer is saying, no, I have to pay you 100. So the 900 could be the overstatement. So try to do the reconciliations right on a regular basis. Cash is collected within a reasonable period. That's my objective. What's the risk? Customer may not pay. Procedure: review age analysis on a regular basis. I hope you know the age analysis, right? That you should review the overdue invoices. Mr. A invoice was raised on the 31st of March. Today is the 30th of June. 3 months. The invoice is overdue by 90 days and Mr. A is not paying. What is the credit limit? 30 days. So Mr. A is not paying despite the fact the invoice is 90 days over. Age analysis, 90 days. Review the age analysis. If the invoices are overdue for payment, try to trace them, try to call the customer, try to send the reminder letters to customer, try to visit the customer and ask them to pay. You have your credit controlling team. The credit controller needs to chase the payments on a timely basis. So what is the bottom line? When you read the books, every system has an objective, which is the purpose of that system, what you want to ensure from that system. Then with every objective, there is a risk. What can go wrong in sales? And what sort of activities you should have in place as an organization to mitigate the risk of what may go wrong in sales. So bottom line, when you look at a system like the one I was showing you, number 2, like a sales system, for example, we took here. But under the sales system, I would like to write something more broadly. The example shown in the lecture for sales system is to give you an idea of what exactly a system consists of. You need to read the book for other systems like purchase, cash, payroll, and expenditure. Only these, right? Expenditure. Now, each system, like sales, has an objective, which is the purpose, why the system is needed, or what the management want to ensure from the system. For example, sales are made to credit. For example, right quantity is dispatched to customer. That is what you want to ensure, right? Each system like sales has an objective, which is the purpose. Number 2, risk. What may go wrong against each objective? For example, incorrect quantities could be dispatched to customer. Incorrect quantities could be dispatched to customer. That's the risk against the objective. And each system like sales has an activity, a control activity to mitigate the risk. For example, the customer order is reconciled with the good dispatch note, with the good dispatch note. If the order says 100 unit, the dispatch note should also state 100 units. So you have a control activity in a system, every system. You have a risk, you have an objective. So each system has an objective, each system has a risk, each system has a control activity. Now, what happens is that when you read these systems, when you go through these systems from the book, this is basically a student note that you have to read the books, please. This is one recommendable area where I'm asking you to read the books. Now, what will happen? In exam context, from this topic 1, examining team do ask you to list the objectives of the systems. That is it from the topic 1. But in the later topics, if you know the control activities, you can find the deficiencies in the internal control system. If you know the control activities, you perhaps perform test of controls better. So I think 2 things are learning here. Number 1, you are learning objectives because you might get a direct question in the exam paper, and you're learning the control activities for the topic 3 and topic 4. If you know the control activities, you will be in a better position to recommend how to overcome deficiencies. You might even identify the deficiency if you know the control activity. So I think the first and the third is more beneficial from an examination point of view, but try to ensure you read through the purchase, cash, payroll, and expenditure systems so that you have the right idea about objective, risk, and control activities. If you don't understand something, you can WhatsApp me for queries about the systems you are reading back at home. I will be solving questions on different systems, on payroll systems and purchase systems and expenditure systems once we go into the topic 3 and topic 4. So I believe those solving of systems in the classes would also benefit you from the book reading. So when you do the book reading, and if you have a query, wait for the query to be asked till the time you do the topic 3 and topic 4. I believe topic 3 and 4 will mitigate your queries, but the current issue is read the book. So in exam context, from topic 1, examining team do ask you a list of objectives of the system for maximum 4 marks, just like in September, December 19 paper. Question number 2A. Let me show you that. I've marked this question here, right, which is September, December 19, scenario 2A for 4 marks. Let me show you that, and you're clear with the top type of question. Now you can see that question on your screen. See how easy this question is. Just asking you, list 4 control objectives of a sales system. 4 marks, just list them. Sales are made to the right customer. Sales are accurately recorded. Cash is collected within a reasonable period. I've given you more than 4 on my presentation. You just need to list them 1, 2, 3, 4, and you get 4 bonus marks. Examiner is not saying explain them, list them. Examiner might ask you list 4 control objective of a payroll system, purchase system, expenditure system. You should learn them, rote learn them. So a question like such is very valid on something which is known as this objectives. So if you know the objectives, you can fetch bonus marks. So knowing the objectives, you can fetch bonus marks. But yes, risk and procedures might help you more with the topic 3 and topic 4. So please sit down, open your books, read the systems, read the purchase system, payroll system, expenditure system. Try to make a summary of them, just like this on the screen. At least if you know 6 to 7 from every system, objectives, risk, procedures, you're in a sound position. Not going with like depth, because in a Kaplan book or a BPP book, you might have been given 20s and 15s and 20s. No, even if you know like a list of 10, fine. Some systems are big, some systems are small. So if a system is big and you know something like 7 to 10 or 8 to 10, that's perfectly fine. Just like a summary in front of your screen for a sales system. So I've also shown you the question, right? Which is this one. And I'm not giving you a solution because the solution is pretty simple. Just discuss the answer in the class as well. So from the lecture 1 today from syllabus area C, you should ensure that you read the book as guided you for the systems. And please ensure you go over the 5 components of a sound system of internal control. And let's see, have we got the key learnings? We got the key learning, what is an internal control system and what are components. Importance of effective controls. Obviously, you all know that if controls are effective, the chances of fraud and error goes down, the chances of risk of material misstatement goes down for the management and for the auditor. If the auditor is performing audit and controls are effective, that will reduce the time you need to spend on audits. So your efficiency towards audit will improve as an external auditor. Correlation of controls with control risk. Controls are weak, your control risk is high. Controls are strong, your control risk is low. I hope you understand that from the syllabus area B. So control risk relates with controls, right? So controls are weak, controls are strong, and you have to correlate them with risk. So weaker the controls, higher the risk, and vice versa. And what are objectives of internal control systems? We've just gone over them, and I've recommended you to read the other systems. So please ensure you revise this very first lecture on syllabus area C, which was the 17th lecture in sequence. The very first one for topic 1 from internal control was internal control systems, and I'll be coming back with the topic 2, then 3, then 4, then 5, then 6. So it's a pretty long exercise on internal control system, but a pretty important topic from an examination point of view. Again, repeating, we just did the first topic today, which is more like knowledge. The topic 2 is again more like knowledge, but plenty of questions in topic 2 on knowledge, more than the topic 1. But the topic 3 and 4 will be the crux of this discussion. This is the critical part of it. So that is it for the lecture 1, 17th in sequence for syllabus area C. I'll see you back with the lecture 2, the 18th in sequence. Till then, have a good day. Goodbye and Allah Hafiz.